Welcome back to my channel. What's up, traders? So in this video, I'm going to be talking about order blocks and how to use them to get best entries in smart money concepts trading. So let's get right into the video. Okay, welcome back. So talking about order blocks. To use order blocks and make money out of it, first of all, you need to know what order blocks are. Since this might be new to some traders coming from price action or indicators trading, what are order blocks? Now, order blocks are points in the markets where smart money, the market makers, throw lots of orders. And when price gets there, price tends to move very swiftly. What I mean is, if we're in an uptrend, for instance, we know what price retraces to a certain level and then goes back up very fast to clear this high and come back again, retraces. When it gets to a certain level, it goes back up very fast. Those levels could be anything, but one of the things that influence price to go up very fast are order blocks, and you always find them below 50% of the range. If you watch the Fibonacci video, you understand what I'm trying to say. If 50% of your Fibonacci is here, you always find these order blocks below, around here, sometimes lower here. So you always will find them. And order blocks found at the origin of the demand, order blocks found at the origin of these buy impulses are called demand zones. As long as it's found at the bottom, it's called an order block and also a demand zone. Okay, so but other blocks that are not found at the origin, that are found somewhere here, are just called order blocks. You don't call them demand zones. They influence price greatly and very fast. How can you spot them? Remember, they're always found below this 50% line at least. So while you might be asking, if price goes below your Fibonacci, do you just buy? What influences it? This is where the order blocks come in. Since order blocks stay below the line, these areas are areas where you can get involved with your buy, because lots of precision happens at those areas. Once price gets there, you see price just have rejections and then fly back up. This is how it works. Then for a downtrend market, the same thing happens. Price does this. Whenever price retraces, it retraces somewhere and it falls, it retraces somewhere all the time. And one of those places it retraces to are order blocks. Now, an order block found at the beginning or the origin of a sell move is known as supply. Okay, so let me write it here. So this is basically supply and demand in trading. Okay, order block found at the origin of a sell impulse is known as what? Supply. So if the order block is not found there, you can call it supply. So if the order block is found at least somewhere here, it's just called an order block, right? But it's always going to be above the red line. If I draw my fib from this high to this low, the red line is somewhere here. It's always above it. You find this order block or these supply zones to trade. So let's see real life charts. If we have something to learn from this, okay? So look at this example when I drew my fib. You can see how do we spot order blocks first. Now, order blocks or supply zones, since this one is exactly at the origin, this is the last bullish candle before a quick fall to the downside. The last bullish candle before a massive fall to the downside is known as order blocks. But if is at the origin of the fall is known as supply and also order block. We call it order block, supply, anyone. So if I'm going to mark it out, I'm going to use my rectangle tool. I'm not going to evolve the wick. I'm just going to evolve the body of the candle, draw it till complete down. Remember, I'm making sure it's exactly the length of the bullish candle. That's what I'm considering. That's my order block. And you see, price did what? Went above the red line, went there straight, tapped it, and fell down aggressively. That's why it's called an order block, because smart money have stacked a lot of sell positions right here. So all price needs to do was to go with a tap and then sink massively. Okay, good. So another example of an order block playing out professionally is this. If you check, structure was broken here. A very suitable place to draw your fib from this high to this low, and waiting for what? A retracement, so I can see a fall. And that's happened, right? So where is the order block here? The order block here is also at the origin of the sell, because I see it, so it can be called a supply also. So this is the last bullish candle before the fall. So I'm going to draw it, a rectangle to marking it, and you see what? How price broke the structure, returned back to it, and then fell aggressively. Why? Smart money had lots of positions inside this. Okay, so looking for at least one more example. We have another example here of a downtrend. How do we spot the downtrend? The low was taken out here. Remember, that's why I taught you break of structure to spot the most hidden hidden change in trends and all of that. So this was a change of character, because price was going up and then it went up and then came down and this low got taken out. So that's a sign that okay, this has flipped bearish. Okay. So what do we do? If you draw your fib from this top here to this low, you know what I'm saying? Like from this high to this low, your 50% will be here, right? And did you see what price did? Price went above the 50% slightly and went up inside higher again. Why is it chasing? There's an order block here. The last bullish candle before a slump is known as a bearish order block. Remember, the bearish order block is in a downtrend. We call it bearish order block. So guess what? See what price? Price was tapped into this order block and gave this massive drop. All right, so let's see an uptrend scenario. Here I drew an uptrend fib before, so you can easily see this. Broke structure, had Fibonacci. We drew the Fibonacci from this low to this high. It went below the red line, came back down to the order block. Here, if I identify my order block here, see what price did. Price went inside, accumulated, and then spiked back up, because this is where smart money accumulated longs that day. Another example here, broke structure, your fib from this low to this high. See what the price did? Price retraced back below the red line, chasing an order block. Now, this is going to be a bullish order block. A bullish order block is the inverse of what we have been doing. A bullish order block is the last bear candle before a sharp up move, which is this. The last bear candle here before that, before price are going up aggressively, the last bear candle is called a bullish order block. The one we're doing before is called a bearish order block for a downtrend. For an uptrend, it's called what? A bullish order block. And you see how price went below the red line just to tap it and then fly up. This is happen every single day. The last example, this high was taken out here. The same thing. This means this fib is useless. We have to withdraw the fib as long as that high was taken out. Okay. So I'll draw my fib from where? From this low to this high. That's a new range we're working with. And you see our price retrace below the red line. And then there is the other block here. Now, this kind of order block is not known as demand. The first one we did here is a demand because it's exactly at the origin of the buy. This one is not exactly at the origin. You see it? If it was exactly at the origin, we'll consider this. But this one is not at the origin. So we'll call this just an order block. You can't alternatively call it a demand, right? You see price retraced below the red line, tapped into it, and flew up. Precisely. So this is how order blocks work. And if you found this video really helpful, like the video and subscribe to the channel for more content. Peace out.